came out with earnings last night, and the stock was initially higher because the earnings were great. And then they started offering some insights that were not exactly so great. So it was their most profitable quarter in years, beat expectations, 23% year over year jump in revenue. That has to be positive. But the stock quickly flipped and turned to the downside, Pete. And it's the cost cutting and the big jump in revenue weren't enough to have people stick with it after Zuckerberg cut virtually everything going forward.
Yeah, it was an amazing quarter for them, John, as you just mentioned. I mean, when your costs for the metaverse go up too, that's also an issue. So they had a lot of great things going on, some maybe one or two bad things. But I think the reality is, I think there was one of the folks in the C-suite, was the CIO, CFO, somebody had some commentary that definitely was pulling down on the stock. Now, the one thing that I think needs to be pointed out is this is a stock that actually started off the year at 130. We were over 300. So this is a stock that it had made a pretty amazing move to the upside for a lot of the right reasons. And you would have thought this would have actually gotten a little stickier up there when we had that big move. But some of the conversation about what's going on behind the scenes from a macro perspective, certainly something that scared folks. And they were talking about Israel. They were talking about a lot of different things. And I think that helped pull the stock down as well. But John, when you look at Meta now and you see an 18 PE for Meta, and you see what their cash flow is, the cash flow is only $26 billion. And then when you see the cash versus the debt at a positive $25 billion, there's a lot of reasons to keep a very close eye on this one, because of course the macro is a big deal. But when you look at the levels of where we've fallen back to right now for Meta, it starts to get pretty interesting, I think, in a hurry.
It has, to me as well, Pete. Mm-hmm. And so I'd point out, folks, that Zuckerberg lost about $3.5 billion, or at least that's what he spent. $3.5 billion. I don't know that it's all lost, right, but that's how much he spent on Reality Labs, which is sort of his metaverse, as Pete said. That's the pet project he's got going on there. I remember, Pete, there were some quarters where he had lost $8 billion and $10 billion. So he's really cut the spend over there, but he hasn't eliminated it. And it hasn't borne any real fruit for him yet either. So you have to wonder how long he's going to be patient, because without that, their blast would have been even bigger, Pete, without that $3.7 billion boondoggle known as Reality Labs.
Want more from Market Rebellion? Don't forget to like and subscribe, and learn more about options trading at marketrebellion.com.